Hello, Mavericks. This is Rob Reinold. It is July 28th, and let's just get into the day. Had a pretty wild morning this morning. We gapped up, and then we lost it all. So we gapped up like 0.5%, lost it all. We were down 1%, and then it rallied back to 0, and then it kept going. It peaked up about 0.7% up, and then we had a late end of the day surge. So the markets ended off on a really positive note. You see 70% of all stocks went up today. We now have more than half of the stocks back up above their 50-period moving averages, which is really a big deal for the market. Before the bell, we got second quarter GDP. It was down. It was not as bad as expected, though, which I think the market didn't really know what to do about that. Now, I want to jump into this because there's been a lot of debate I've seen online, and even I've had a couple of questions about this. We've always said that, 2 consecutive quarters of GDP contraction is a recession. Now, look, that is not technically true. Now, that's what the street uses, and that's what we've all talked about. But there's actually one group of people, the NBER, they actually determine when we've been in recession. They look at all these different indicators, and when they finally say we're in recession, we're probably out of recession. That's how long it takes them to finally go through all the data and say it's a recession. So look, whether we're in recession or not in recession, I don't really care, because whether the NBER says we are or aren't, the market has sold off 20-25% this year because of it. So the big question is, where is it going forward? And we actually had some earnings after the bell. Apple came out with better than expected earnings. Amazon came out with worse than expected earnings, but Amazon was up 10% after the bell. So generally, we have some big losers after hours in the earnings season, but the futures are up another 1 to 1.5% after hours. So unless that fades off for some reason, we are going to have a nice strong open tomorrow morning. So let's get into the charts. As you can see, yesterday we came up and we hit that 400 point on the SPY, which was some resistance levels. We backed off at the close, so that wasn't a real convincing close yesterday. But boy, there is no doubt about today's candle. We have definitely cleared out of that resistance at 400. The problem is we have overhead resistance right above us at 410. And I talked with our currency group on Tuesday and our stock group on Wednesday and said, hey, look, even if we do break above this 400 on the SPY, we've got 10 points before we run into this next really major point of resistance. And that's only 2%, 2.5% higher. So I said, look, I think you need to be more bullish than bearish, but you can't really get too far out of your skis. I said, I'm at a +1, and I'm not looking for all that much. Now look, this is very encouraging. Take a look what our 20-period moving average is starting to move up. Our 50 is flattened and stopped going down. Look, these could all be early signs of a market turn. But look, at Maverick, we don't say we think we know the future. We don't know the future. And we actually actively say we have no idea what the future holds. So what we need to do is take a look at technicals and say, okay, this could be a market bottom. We don't know yet. What we do know is that the market is more bullish than bearish at the moment, and we're running up into some resistance at 410. So look, still like a +1. Say, hey, you know what? The market's looking a lot better, but I am not going to go out and take a bunch of bullish positions until I get some more confirmations. Like the 20 crossing above the 50 moving average would be another check mark that you could check out. A retracement back to the 400 and a test of that level and a bounce off that would be another check. So look, things are looking great, but again, we have to trade the market in front of us, and right now it's a +1 market. Coming over to the NASDAQ, same story. Now the NASDAQ, the same story for our last swing high, but we are right back into this big resistance around the 310 area on the Qs. Look, there is a bunch of resistance, 310, there's some more up there around the 315 area, and then you jump up to maybe the 330 area. Look, I'm just going to put a big block here and say, okay, we've got some serious overhead resistance here. Same thing, still bullish, but just a very reasonable bull, thinking, okay, the market may creep up here into the 320 area, maybe even up to the 330 area. We're talking about 5 or 6%, and there's a lot of heavy lifting that the market has to do out there. So bullish, but just not looking for all that much. We take a look at the heat map today, and you can see all the big boys did all the heavy lifting. Microsoft up 3%, Google helping it out, Amazon, Cisco, MasterCard. And you can see a real big thing of green in consumer. Consumer had a great rebound. Industrials, real estate, utilities. Really, everything was pretty much strong except for big financials and big healthcare. That really was the only point of weakness in the market today. So let's take a look exactly at where we stand here. This is where we started the week. We started the week at a 0. Now I bumped that up to a +1 and a +1 on both the weekly outlook and the monthly outlook on Wednesday. And so for the rest of the week, I think we have to say, hey, you know what? We need to get a little bit more bullish on the weekly outlook. The week is almost over, so we'll redo this all on the weekend in the trading room. But it's definitely time to get just a tiny bit more bullish. And look, doesn't mean you go out and get crazy. It means that if you had, 7 bullish trades and 5 bearish trades on, maybe you go to 8 bullish trades and 4 bearish trades, something like that, to where you're now skewed a little bit more to the bull side. Let's go ahead and jump in and take a look at some potential trades. Now I'm going to be covering some of the trades that our traders brought to us on Wednesday in the midweek trading room. And this is a great one here. This is EDU, and you can see what a breakout. We talked about this one on Wednesday, and you can see the breakout occurred on Thursday. And boy, what a follow through, up 12.6%. I know we've got a lot of traders in this one. Great job. Again, my target was 28, so we're well past that. I think if you want to take some money off the table on this, I think that's definitely warranted. Another one here is Colson. Wow, I combined Coors and Molson into Colson on that one. So that's, we have a lot of stocks like that, someone made a slip of the tongue or did something weird. And now I will never call it Moores Colson again. Wow, I just screwed it up here. Coors Molson again. I'm going to call it Colson. Anyway, regardless, great chart. Nice green candles the last 2 days. Yeah, we're running into some resistance of 59. It may need one more shot at it. But here's a great thing. This stock was strong before the market bounced. It's a great telling sign that this thing does want to go higher. So great call on this one. I think 60 target is fairly reasonable here in the next week or two. And here's a new one. This is Bumble. This is something that's been on my list for the last 2 weeks. Nice breakout early in the week. It did sell off, but you can see strong stocks are the ones that get all the money when the market gets in a good mood. Up 7.5% today. Great call from one of our traders on this one on Bumble. Now look, we are more bullish than the market here, but we always have to have some bearish trades. And Maverick, we're big believers in basket trading to where you have enough on one side to where if the market does reverse, that you're going to have some insulation on that. So let's take a look at a short. I do have to say shorts were tough to find. Not a lot of stuff is looking like great shorts here. So here's Twilio. Twilio, you can see here, is just in this descending triangle pattern. And look, it has bounced off 80 4 times. Look, this is just another one of those bounces. If you want to let this thing bounce up a little bit more, maybe up into this 90 area, I think it probably happens. But I think at that point, if and when the market turns over, I think this is going to be a great short. I don't know if it breaks 80 this round. We might have another move down and then a bounce off of 80. But I think if you can get short, bearish in some options trades up close to 90, I think that's going to be a nice trade on Twilio. Let's talk about tomorrow. So we've got a happy market, a buoyant market. People are encouraged. We've got good earnings after the bell. I don't see any real major sell-off on Friday where people panic and say, I don't want to hold over the weekend. We're going into the weekend in a good mood. So I think Friday's likely going to be a maybe slightly up, slightly down day. I think it's more of a consolidation day. I'm not looking to take any new positions tomorrow. I'll manage the stuff I have, and then next week I'll come back on Monday and take some more positions. Because I think next week is going to be the test. We had a big move up. Let's see if there's even more follow-through buyers after this Thursday and Friday. We do get the core PCE index. This typically would matter, but it doesn't matter because we just heard from the Fed. The Fed has told us what they think. This number doesn't really mean anything. We do have some sizable earnings reports tomorrow morning before the bell. And then after that, we're going to be wrapped up for the week. Exxon and Chevron, probably the biggest ones in the energy sector. That is it for the Market Roundup. Thanks for joining me. Take care, everyone. Goodbye.